in the chat box. Let me know where you are watching from in the chat box. Okay. Where are you watching from in the chat box? Let me know in the comment section. All right. So I want to welcome everyone to yet another webinar of, you know, going through the market to understand what is going on. Okay. Yeah, so my name remains Tunmise Olaoluwa, and today I'll be walking us through technical analysis using price action. All right. So it's important that we know that any information, opinion, news, research, price, or analysis shared or discussed on this webinar or linked to this presentation is provided as a general market commentary and does not constitute any investment advice. All right. So a brief about me: Tunmise Olaoluwa. I have 7 years experience trading with solid background in finance and quantitative research. My trading results have been consistently profitable across various strategies. I focus on trading price action, momentum trading, and candlestick pattern across three currency pairs, which is Euro USD, GBP USD, and USD JPY currency pair. So in today's agenda, we are going to discuss the use of top bottom strategy. Two, review the Euro USD currency pair. Three, review the price movement of Euro USD. Four, review any currency suggested by the audience. Okay. Now, so this is going to be a 45-minute lecture, and you can use the YouTube live chat to ask your question during the webinar, and I will periodically check the chat and answer your questions. Now, what strategy does this consist of? Now, this consists of: one, we'll analyze historical price movements. Two, we utilize candlestick formations, chart patterns, and market structure. Also, what kind of trader is it suitable for? It is suitable for position trader, intraday trader, and swing trader. Now, when to use this strategy? You can use this strategy during high liquidity period, and you can use the strategy within 1 to 1 month time frame. So let's take a deep dive into our live session. All right. Now, as you all know that when we want to begin to trade, I've always advised that we should look at what has happened in the higher time frame, because what has happened in the higher time frame gives us a green light as to what will happen. Okay, because the previous historical price, can be used, the can be used to predict the future. So let's go to the 1 month time frame. So here is the 1 month time frame of Euro USD, which is the currency pair we are working with. So on this higher time frame, we are mapping out levels of support and resistance. Okay, we are mapping out levels of support and resistance. Let's figure out some key levels. So this is a key level. And why do we call this level a key level? Because if you look at it, it has some historical footprint here, 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 and here. Then we can see here, here likewise. Okay, now you can see that across these levels now there are historical footprints. Okay, there are historical footprints. Now these historical footprints are significant. They are significant, one, because it's on a higher time frame. Okay, two, because at every point at this level, right, price has always returned, with the exemptions of levels where there was breakout. Okay, with the exemption of levels where there was breakout. All right, but when you look at it, when price came down here, it bounced back, came down here, it bounced back, came down here, it bounced back, finally broke out from here. Price came back to that support turned resistance zone. Now it bounced back, came there again, it bounced back. Now that tells us how significant this level is, which is an important level for us to pay attention to. Okay, and that is why we are paying attention to this level. Okay, good. So right here and there, we can see that we have been able to map out these key levels of support and resistance. Okay, now let's go down to the weekly time frame. Let's go down to the weekly time frame. Now we can see that on the weekly time frame, the story is clearer. Okay, the story is clearer. All right, so let's do this. Okay, awesome, good. So here, let me see if I can take this off. Okay, so yeah, okay, good. Let me see if I can take this off. Take this off. Okay, we're good. We're good. Okay, good. Now, so looking at this now, because this is becoming more clearer, right? Now we can now see that there are actually those layers. So which we are going to map out right now. So we can see that there is support and resistance at this level. There is another support and resistance at this level. Okay, so simply we are looking at support and resistance at yeah, we're looking at support and resistance at this level. All right, then we can also see that there is also a a support zone here, so which is one level to also pay attention to. Okay. So now we can see that this resistance zone is a level to pay attention to. This support zone is also a level to pay attention to. All right. Good. Now, what do we see? What I see that is most likely going to happen at this level is based on two things that would most likely confirm and make it happen, right? One is the buying power. The buying power that we can see on the euro. The buying power. And you can see that the candlesticks are more fully bodied candlestick, you know, with such great momentum. You can see how a single candle pushed high. Let me look at this here. A single candle pushed as high at this level, and another single candle pushed as high as this level. Now that tells you the buying power that is coming in on Euro USD. All right. Now, being that currently the price is now seated at the, price is now seated at the resistance zone. Okay. Now, what I see that would most likely happen, okay, is that there is a higher probability that price will consolidate at this level and finally break out. There is a higher chance that price will consolidate at this level and finally break out. There is a higher chance. There is a higher chance. Okay? Yeah. There is a higher chance that price would jump up and consolidate here at this level. There is a higher chance. There is a higher chance. Okay, there is a higher chance that price would consolidate here and jump up. Okay, now why did I say that? Number one, I've already explained, because the buying power that has come in from this level, okay, pushing up. All right. And the next thing is the possibility and the higher chance that price would consolidate and break out to the upside from this level. Price will consolidate and break out. Yes. That is what I see. That is most likely going to happen. All right? Yeah. Yeah. So if you have any questions so far, you just drop it in the comment section. All right. So now let me clean this. Let me clean this. Okay. So I'm saying that there's a higher probability that price breaks out from here. However, what might happen before price breakout might be a consolidation at this level, and then the breakout happens. All right. So, but as a trader, of course, because there is no perfect market, all right? So in this case, you want to look at um, implementing risk management, okay, by putting your stop loss on either of this level. All right, good. So let's go down to the 1 day daily time frame. Okay, let's go down to the daily time frame. We are on the daily time frame now. Okay. All right. So you can see what I'm saying. Consolidation are already coming in here. So let me just take this guy off here, so it doesn't. Yeah. Okay. Good. Let me just take this off too. Okay. Good. Yeah. So we can see clearly what I'm saying. So you can see here now that consolidations are already coming in. Look closely at this level. So this is the level where I said there would most likely be consolidation and then a final breakout. Okay, so this is more like price accumulating its strength for the upside, knowing fully well that price is currently at a minor resistance zone on the weekly time frame. However, on the daily time frame, it's a major resistance zone. So a consolidation is inevitable, of which market is already experiencing that consolidation here. We can see it clearly here. Market is already experiencing that consolidation. Once the consolidation is complete, then price will take off. More like a tornado. All right. So that's it. Yeah. So. Okay. Alien said, I'm seeing a minor support from the consolidation before breakout. Yes. You are seeing well. There is a minor support here before the breakout. Okay. There's a minor support here before the breakout. All right. Good. You are following. So we go down to the 4 hours time frame. Now, if you look closely on the 4 hours time frame, you will see that the consolidation is already happening. So now this consolidation happens when there is a sustained upward movement in price. So when there is a sustained upward movement in price, like we are seeing here, okay, then we would most likely have a pullback that comes in form of a flag pattern. Okay, comes in form of a flag pattern. Okay, before pushing up. Before pushing up here. All right. Can you see that? Okay, good. Somebody's asking, is it advisable to take the trade on weekly time frame when there is breakout? Now, is it advisable to take the trade on the weekly breakout, or on the weekly time frame, when there is a breakout? That's an interesting question. Okay, and this can only depend on your kind of trading And you, who are you as a trader? Okay, are you a position trader, intraday trader, swing trader? So if you are an intraday trader, then you would most likely be taking your trade within the 4 hours time frame, 1 hour time frame. If you are an intraday trader that trades within the week, 2 to 3 days, you pick trades that you hold for 2 to 3 days, a week or two. That is, you are an intraday, a day trader. All right. However, if you hold your trade for weeks, possibly months, you are a swing or position trader. So either of these, if you are a weekly trader and you see a breakout on the weekly time frame, you can pick it from there. All right. So yes, I believe I've answered your question, Elolo. All right. So this is our outlook on Euro USD. Now let's go down to the 1 hour time frame. Let's go down to the 1 hour time frame. Now you can see that the 1 hour time frame now is giving us a not just a clear picture of what is currently going on in the market, okay, at a closer range. However, it's also giving us a perspective as to what price is doing currently and what it might do next. So the 1 hour time frame further confirms the consolidation movement. So which means the consolidation is already happening. All right. And voila. So this is a resistance zone we are watching. This is a support zone we are watching. The higher probability is that price would break out to the upside. That is the higher probability. After this consolidation, price breaks out to the upside. Okay? All right. Yeah, okay. So, now, what currency pair do you want me to review next? Drop it in the chat box. If you have any question on Euro USD, drop it in the chat box. If you want us to review another currency pair, drop it in the chat box. Let's see who drops a a currency pair first. Yes, alien market is in bullish flag pattern now. Yeah. So what currency do you want us to trade? Who is giving us hint on what next to trade? Okay, I'm closely looking at my chart. Drop your preferred currency, okay? What currency do you want us to trade? Who is going first? Okay, what currency do you want us to trade? Who's going first? Who's going first? Okay, I see gold. All right, gold. So let's look into gold. The gold market. The gold market. All right, so on the gold market, we'll go to the 1 month time frame. On the gold market, we'll go to the 1 month time frame. Okay, gold. Awesome, awesome. If you were with us, you know, in our previous uh, in our previous webinar, in our previous webinar where I analyzed gold, and at the time, 3,200 was my target level. But look at where we are, and now it has even surpassed our target level. So let's go over it again. So I'm going to go to the 1 month time frame. Okay, 1 month time frame. All right. Now we can see clearly on the 1 month, on the monthly time frame, that gold has been bullish from 1st of February 2024, and we moved up, and here we are on gold. Okay, so we might not see much pattern to study from the unending bullish momentum. However, let's go down to the weekly time frame. Okay, let's go down to the weekly time frame. All right. Okay, so here we are at the weekly time frame. Okay, so when we look at the pattern and movement of gold in recent time, it goes up, swings up, comes down, relaxes, swings up, relaxes, okay, swings up where it is now, and of course would relax before swinging up. And of course, you know the reason why gold is having a good time. All right, the macro economic environment is giving gold the edge. Of course, because gold is globally perceived as the safe haven currency. So when there is any economic turmoil, trade war, like we have between China and the US, you know, the the global tariffs on export, import, and a lot of economic issues here and there, we see investors getting attracted to gold as the safe haven. All right, and gold keeps going up. So at this point, this is on the weekly time frame now. This is what we are looking at. Okay, this is like what we expect on the weekly time frame. All right, good. So let's go down to the 1 day. Okay, someone said we need, sir. I don't know, what do you need? So you can just rephrase so that I can understand. All right, so when you look at it very closely here, you see how, let me take this off so that I can clearly demonstrate again for us to see. So you can see that price goes up, comes down, goes up, comes down, swing up, and on like that, right? So we might see a pushback here and a swing up later on gold. All right. So currently, if we are going to follow macroeconomics, okay, we might just consider gold attractive for a buy. However, it's highly volatile, and if you are not a huge investor, you might lose your money. All right, so you want to be very vigilant when trading gold because it is highly volatile. Okay, it is highly volatile. All right, good. So on gold, there is nothing much to see on gold. So let's go to the 4 hours time frame to see if there are any uh, opportunity for us to analyze the market there. All right, so we can see here. Okay, so we see the gold market here now. Uh, okay, so we can see good. So we can see that we have a good pattern to watch at this level. So we just map those, levels of support and resistance, based on the pattern that we can see. So currently here now, so the probability of gold pushing back and touching this level is higher, after a consistent up run. So after a pushback or a retest at this level, we might see gold continue its journey upwards. Okay, yeah. So and that's it on gold. So we just round up here in the 1 hour time frame. Yeah. So okay, so 1 hour time frame is telling us that okay, the pullback has happened, and in the 1 hour time frame there's already a pullback here, and then price is already preparing to go up, but this is not sufficient enough to buy on gold, right? So if you are ever going to buy on gold, you want to wait to see price break out of the highest level at which gold has ever gotten to. All right, good. So you want to see gold break out of this level, right? Yeah. So and that's it for today. So please do well to keep in touch, follow us on our YouTube channel. That's smash the subscribe button, and don't forget to stay tuned whenever we're having our next webinar. Yes, so before you take your leave, we just have to run down through some risk management, sessions, because you need it, right? So if you are new to trading, if you are starting with us today, if you are a newbie, you are advised to start with a demo account where you can learn and understand the market and your strategy without risking your real capital. Also, for all traders using live account, also demo account likewise, you are advised to use a stop loss. Very important, okay? Use a stop loss. Also, trade with a risk to reward ratio. All right, always aim for 1 to 2 risk to reward ratio. Very, very important. Now, risk only a small percentage per trade. All right, risk only a small percentage per trade. Also, don't forget to diversify your trade. So don't use 5 lot size to pick a single trade. It's not advisable, right? You can diversify your trade and spread those lot size across different positions. Then avoid over leveraging. Stick to your plans. Keep up with the market news. This is a very, very necessary skill. Okay, it becomes a skill because now there are so many news coming in and out of the global market. You don't want to miss out from them. Avoid over trading. Review, adjust your trading strategy regularly. Now, don't forget we have our trading app. It is live on Google Play Store and Apple Store. The trading app offers wide range of trading instruments with low spread, fast execution, zero commission. It also has free educational resources, 24/7 customer support, and a strong commitment to fund and data security. We have a promo code for you to double your deposit in just 5 steps. Can you imagine? Just 5 steps. And here are they. Open your trading app or visit our website. Go to your profile, find the promo code section in the menu, enter the promo code and press activate. Make a deposit and enjoy your bonus. Don't be told. Experience it yourself. Now, a quick summary of what we just discussed today is we've discussed on price actions, its components, suitability for traders, and its applicable scenarios. Also, we've reviewed strategy on the live chat during the live trading session right in the terminal. Okay, and also we want to talk to you about we've talked about the trading principle that you must follow. So what are the key takeaways from today's session? Number 1, analyze trading instruments. So you can see the steps we took. We analyze trading instruments, review your action and reflect on your decision. Ask yourself, why did I buy? Why did I sell? Why did I make losses? Why did I win? All right. Now keep up with the latest market news and update. I've already emphasized that. Also use our educational resources to enhance your understanding on trading strategies and tools. Okay, and that is all for today. We need 1 minute of your time to give us a feedback about our webinar. Please do well to scan the QR code on the screen and use the next 1 minute to fill the webinar and give us an essential feedback, because your feedback is important and essential, and it equally helps us to improve our future webinars. All right, and thank you for joining and see you next time. Bye guys.